Today, I am Kim Hickey and joined with Taylor Castro. We're both with Lawyers Title, and we have been putting these weekly wrap-ups on for the past, I think, gosh, has it been 2.5 months, Taylor?
I would say, yeah, since March.
Yeah, so March. We hope that those of you that have been consistently on are finding these valuable, and it's been helping you out with your clients. But I love something that Tom Ferry says. He says that you are the knowledge brokers. And I just love that because it's so true. We need to be out there sharing this information with our clients so that they can make the best home buying and home selling or simply doing nothing decisions. So just want to thank you for being on this each week. And we always say if there's ever anything that you would like us to cover on the next one in 2 weeks, or if there's something that we can help you with when it comes to social media or with your open houses or anything that you want us to share or talk more about, just either put it in the chat or email us when we send you the slides after the presentation.
Yep, and just to build off that, you guys, as Kim said, you don't have to be frantically taking notes. Everything we do share on here and or social media is for you guys to repost and or share. So we will send out all the slides after the presentation today. So I hope you guys enjoy.
Yes. So as we all know, there's a lot of heavy stuff that is out there in the world right now, and a lot of people have many differing opinions on everything, but what we are going to be sharing and what we share in these presentations is the data and the facts, not the right brain emotional stuff. We're sharing the factual data so that you can help as many people as possible. So looking here on this first slide here, you've probably seen the retail data that has come out here recently. So let's start out here with this quote by CNBC. It says, retail sales shattered already lofty expectations for May as consumers freed from the coronavirus lockdowns began shopping again. The 17.7% headline gain beat the 8% estimate from economists surveyed by Dow Jones. Consumers were locked up and then they were freed from the lockdown and they beat all expectations. The clothing and accessory stores reported 188% gain, while sporting goods, shopping, musical instruments, and bookstores rose 88.2%. Food services and bars saw a 29.1% rebound in May after being reopened. And definitely these are all great stats, good news, showing that things are moving in the right directions. But while these monthly gains set records, the economy is definitely making up, still needs to make up for lost time. And after bottoming out in April, the economic activity has continued to rise in June, recapturing some of the collapse that occurred when most of the country was locked down. We're starting to see the early stages of a V-shaped recovery. The grocery and discount stores, general merchandise stores, all recorded sales above a year ago's levels. Restaurants and hotels are still down from a year earlier, but not nearly as much as they were down in April. And movie theaters, airlines, and amusement parks are still very, very low. They consider this somewhat of like a natural disaster, and most natural disasters have a V shape where when things get back to normal, everything comes back. So that's what most are predicting. The Wall Street Journal surveyed economists asking what type of recovery that they expect. And almost 8 out of 10 believe that it will be a V-shaped recovery, a true V with a sharp drop and a sharp rebound, or a Nike swoosh with a sharp drop and more gradual recovery. And some experts though are concerned about a second wave of COVID, which are calling for a W recovery, which is more like a double dip recession. And others are calling for a U with a prolonged bottom. while a very small percentage are calling for the dreaded L, which is no recovery in the foreseeable future. And then it's important to note that 91% of economists surveyed by the Wall Street Journal say the recovery is already underway or will be soon. And we're seeing that already, especially in our real estate market. The real estate market right now, as I'm sure you're all feeling, is on fire. Buyers are out, as we've seen the showing time data increase week after week. People are having more confidence to list their homes, and homes are selling relatively fast. So this is all good news for housing, as we talked about it being the leader in the economic recovery. And looking at this quote, in a sign that housing, this quote is by the National Association by Home Builders, in a sign that housing stands poised to lead a post-pandemic economic recovery, builder confidence in the market for newly built single-family homes jumped 21 points to 58 in June. And any reading above 50 indicates a positive market. So as the nation reopens, housing is well positioned to lead the economy forward with our super tight inventory. Mortgage applications are increasing every day. Interest rates are at historical lows, and confidence is rising. Buyer traffic has more than doubled in 1 month, and even home builders are growing online, and they're getting more phone inquiries. We definitely have challenges with the inventory, but we also have opportunities definitely exist in the single family market. Home builders are reporting an increased demand for families searching for inner and outer suburbs. It's also good to note that the economic impact of one new home construction home sale is $89,000 that is being put back into our economy, and that is huge. That $89,000 is the commission that people are being paid, the supplies, to buy all of the supplies to build that home. When the home is built, people, you know, they need blinds, they need to get new landscaping, some are building a pool. And so all of this is $89,000 that is going back into our economy. So our ability to make a difference in the real estate community in our economy is huge. So I want to bring to you some information that came out about forbearance, because that's been a question as well in our business. Black Knight tells us of all active forbearances which are past due on their mortgage payment, 90% have at least 10% equity in their home. So if somebody had to sell their home because of a situation that they found themselves in, 10% equity is enough to sell their home and also pay the real estate commission. So this is definitely encouraging. Also, 80% of homeowners have over 20% equity. So all this does is just give more options. You know, people can pull out equity to free up some cash to buy them some more time to stay in their home, or they can simply sell their home. These are all options that people did not have in 2008 in the housing crash. And this high level of equity provides options for homeowners, policymakers, mortgage investors, and servicers in helping to avoid a downstream foreclosure activity and default-related losses. And next, Taylor's going to take it from here, and she's going to share more about the home equity across the country. So your turn, Taylor.
Well, thank you. As you guys can see here, this is going to be the National Home Equity Chart. We wanted to share this map with you to show you that the gain across the US and what we're seeing. All this information is going to be pulled from CoreLogic, and this report is going to be from this time last year. And we can see that on average, we've had a 6.5% growth in equity, which is a very good thing. Equity, as Kim stated, is giving people the opportunity to leverage the equity and their capital to help them withstand this financial economic downturn that we are seeing right now. Some other great news to tell your sphere is that yes, the average in the US is $9,600, but here in the state of Arizona, we're seeing on average of a gain of $20,000 worth of equity within each home. So that is, a great investment right there. And another reason why you should be telling everyone it's another great reason to buy. As we are looking at this graph, it's going to be telling you or explaining why people are more likely to move and or buy within the next year. This information is going to be coming from LendingTree, and the most obvious one right now, and we've said this in previous presentations, is that mortgage rates are at an all-time low. And as we say that, we want to keep reiterating that they are staying low, and it's crazy how low they are, and the buying power it is giving people with the low rates right now. Then we are, seeing that there's been a chunk of people that have also been able to save more money right now just due to everything going on. They're spending less, so they're able to reallocate those funds to help with a larger down payment. And then we're also seeing 28% of people being sick and tired of being stuck in their current home. Our home has now become our workplace, our gym, our restaurant. May not be our favorite restaurant, but it's the true reality of everything right now. And people don't want to be reliving what they did in the last 90 days of being stuck in their home. They've obviously found some flaws, and so they're ready to part with it and move on and really find something that's going to better suit their needs. As we stated before, and here it is again, the mortgage rates are at a historic low, and this is going to be a great graph to show you what it's looked like over the decades. This graph is coming from Freddie Mac's blog, and the interest rates are at 3.13%, far lower than the average we've seen. Like I stated before, this is not only helping with the economic downturn and making people have a greater affordability, but it's also, excuse me, giving them their payment is being less, so they're able to afford more. So, people are now taking that and deciding that they want to buy and or build their dream homes. As Kim stated, every time someone does that, it does help boost the economy by $89,000 here in the state of Arizona, which is phenomenal. So even looking back to 2018 when the economy was good, and this is something to keep in mind and tell your buyers that these rates aren't going to last forever. In 2018 when everything was good, we did see interest rates still around the 5%, and that does affect the affordability of what they think their payment is going to be and how things are going to shake out. So if you have some people still on the fence, I would definitely tell them to do it now, even though the market is in a frenzy. If you guys have joined Tina Timbor's class, throughout the entire valley, we are just different degrees of hot. There's not one cool market out there for us. So, it's just going to be a benefit for them. And here's just another great way of showing them of that. Like I said earlier, that people are able to afford more. And the relative income needed to the mortgage payment has fallen in the last couple of years, showing about 14.6% of the income for the mortgage payment. Historic norm has been around 21.2%. So the benefit of this is the low rates right now is also having an impact on not only their payment, but their affordability, as I've stated several times. This is going to be your housing affordability index. As we're looking at this, we want to remind you guys that the higher the numbers, the better, because that means it is more affordable to purchase a home in the median price point right now. The affordability hasn't been better. The only other time we've seen it a little bit better than this is when we had distressed or a market flooded with distressed properties. But we are far from that today, as you guys know. Just a little tidbit on how crazy this market is right now. One of my clients had a listing go live yesterday with a little bit of a higher price point. It was at $675. And within 3 hours of going live, she had a full price offer with a $5,000 escalation clause in there. So that is crazy. And I believe she was under contract with less than 5 hours on the market. So buyers are out there, they're hungry, they're wanting to move, and they're prepared to move quickly right now. So going into this quote right here from Freddie Mac's quarterly forecast, as we talked about all the pent-up demand and what I just mentioned, it really sums up where we sit right now. Starting out the year, we knew we had low inventory and there was an inventory challenge. So what does this mean for your buyers? It means that your value add right now is better than ever. Competition is hot, fewer homes are on the market, and rates are really helping people drive them to their dream home. So working quickly with a trusted real estate agent like yourself is going to really help their dreams come true and getting that home. What does this mean for sellers? Well, it just reiterates the sellers that clients are out there selling homes, and people are ready to buy. They're motivated, they're well qualified, and as soon as something comes on the market, they're ready to snatch it up. So if you have any people that are on the fence of selling, feel free to share my story or my client's story of less than 5 hours on the market and she was under contract, which is crazy. So people are in a good mood. They're out to buy. They want to move on with their lives. They're ready to figure out what the new normal is going to be, and they're showing confidence in that. So with all that being said, we like to keep it short and sweet and want to see if you guys had any questions. If not, I do want to say thank you guys for joining our calls. We try and keep it to a quick 30-minute or less format every 2 weeks. We try and give you the most up-to-date information. But if you guys do want to follow us on social media, either on Facebook and or Instagram, Kim and I are both posting stuff daily as we are getting the information. So you guys can then also share it that way. But if you guys don't have any other questions in the interim, as a reminder, we will be sending out these slides before the end of the day to give you guys all this information. Please feel free to share it. And or if you have any questions, don't forget to reach out to Kim and I. We are here as your guys' power partners to help you guys grow and build your business, and always support you.
We'll be back in 2 weeks.
Yes.
So everybody stay safe.
Stay safe and healthy and enjoy the 4th of July.
Thank you, guys.